chairman of Seafried and Brew, and we have a surprise guest with us today.
Hey folks, Ed Seafried here, and I've been begging Jay to let me participate in his Good Monday, very popular series, as you well know, because I got an idea to share with him, and he when I brought it up to him, he said, "Oh, I've been wanting to do that too." So we collaborated on this Good Monday lecture. It's not a very long one, but I think you'll find it fascinating.
And it all begins with something that is like this, Ed.
Uh-huh.
Like this. Typically as we see things.
Yes.
And the thing is that it's not so outlandish, because remember last year we had a webcast of the blue dots from the FOMC in terms of where they thought interest rates were heading. And last year, I guess it was just one time last year, that there was actually a member of the FOMC that suggested that negative interest rates should be where they should be.
You're correct, and it was a shock to me, and I think it shocked you that someone on the FOMC would even ever suggest that we go into negative interest rates. And as Jay put the algebraic formula here in front of you, is a negative something. So today's Good Monday is going to be about what I call a very strange world, Jay, of negative interest rates. We tried to make this slide eerie, ephemeral, ghost-like, but maybe we didn't do too good of a job. But the topic is, in those countries with negative interest rates, we're already seeing some very strange phenomenon. First of all, let's talk about negative interest rates from a policy perspective. When you think of negative interest rates, you probably think of them theoretically. But they're an incentive for commercial banks. It's usually negative interest rates you deal on the very highest level of banking. It's the central bank talking to the commercial banks. And it's the central bank saying, our economy is so weak, so depressed, we need to make you do something to stimulate it. Now, what can that be? Well, we want you to make more loans. We want you to buy bonds, both of which is a stimulus to the economy. In case of making loans, it's a direct stimulus. The spending helps GDP. In the case of buying bonds, it's an indirect stimulus, because that tends to raise the price of bonds and lower interest rates all across the board. And especially in the long end of the scale, when long-term interest rates drop, you may see a boost in housing, for example. So when I think of negative interest rates, what Jay thinks is negative interest rates, we think about it at the highest policy level, sort of an incentive. Think of it as an incentive for commercial banks, nothing more. And we never think of it at the consumer level. But you're going to be shocked with what you're about to see. The first story is coming out of Denmark. Denmark has negative interest rates, and there are some strange things going on in Denmark. Jay, you want to walk the group through this slide?
Well, when we look at it, and we were saying that it isn't that abnormal in these days to be looking at negative interest rates, is that take a look once again at Japan, that essentially close to zero. In fact, when you go out 10 years, they're negative. And you look at the Eurozone being negative below that zero level, as you were mentioning, Denmark being pretty incredibly below,
negative, right?
As well as Sweden being that low.
And here's a bigger shot on your side of the Sweden-Denmark, clearly below zero. And this is not a small phenomenon, Jay, because this slide indicates 23% of the world's GDP is now under negative interest rates. Now you might say, that doesn't sound like much. Well, remember, America's not under negative interest rates, and our GDP is huge. Germany isn't when their economy is huge. But those who are under it, Japan, Europe, Denmark, and Sweden, make up 23% of the world's GDP. So it's not an isolated incident. Our incident that we're going to expose did happen in Denmark, but it doesn't mean it couldn't happen elsewhere, Jay. So the first point is, I wouldn't call negative interest rates ubiquitous. I would call them popular. Would that be fair to say?
I think that would be fair to say, yeah.
Okay. We want to introduce you to this family. Hans Peter Christensen. He lives in Aalborg, which is a city in Denmark. There's his house behind him. He's married with 2 children. He had a very interesting day last week, Jay. Because last week, He was sent a check from his bank for the equivalent of $38. Now, of course, banks send checks to people all the time, but when you hear why he got this check, it's pretty stunning. Hans, the father, of course, he has a loan, variable rate loan with his bank for that house you saw in the previous slide. It's a variable rate loan. Interest rates have come down so far in Denmark, and they're negative. He actually got a check for the equivalent in Danish kroners, they're not a member of the European Union, of about $38. His interest rate as of December 31st, mortgage rate excluding fees, is a negative 0.562. He's being paid to have the loan. Now, I know you bankers are listening to us are thinking, oh my God, if that happened to me, I'd be in big trouble. We realize that. And we're worried about it. You should also know that Janet Yellen has opposed them. She said many times, I don't think we should ever go to negative interest rates. But there's a new term out there called perma-zero. And it's this idea that zero interest rates might be here for a lot longer than we think, Jay.
All right, Ed. Now the big question.
Yes.
Do you think, away from what Janet Yellen is saying, that if we had a certain amount of tailwinds that we could go into negative interest rates?
The only thing would make me think we could have negative interest rates, Jay, would be something happened in Cleveland this year at the Republican National Convention. Could you imagine some sort of physical, violent riot that disrupts our political system? Could you imagine something that causes a huge recession, depression, what we call a exogenous event, something that happens outside the mainstream? You could see something like that happening, but only in the strangest cases. I don't think we're going to get negative. Now, the Fed's going to be meeting next week. I don't think they'll raise rates in April. Good chance they might raise them in June to get us a little bit farther away from the negative area. But that's all we have to say for Good Monday. We wanted to put this kernel of information in your brain and let you process it. It will be a good anecdote to talk to your customers and banking colleagues about. There's actually a place in the world where somebody has a negative mortgage rate. It's in Denmark, and it's real.
Time to buy a house in Denmark.
Yeah, absolutely.
Everybody have a great week. This is Jay Brew, co-chairman of Seafried and Brew, and my good friend Dr. Ed Seafried. Thanks for joining us this week.
Thank you.